everybody. I'm Stephen Klajian, and welcome to Back to the Futures. 30-minute segments each and every Tuesday and Thursday from 1:30 to 2. I'm very excited to be here. I love the futures markets. So many people are coming to me from all around the world wanting to learn how to trade futures. And what better place? Tradier Futures. Great margin, great platform, great technology, and you have me, 41 years in the industry, to guide you along the way. What a day, what a day, what a day. We came in today with the understanding that we saw big sell divergences on many of the big stocks like NVIDIA and Amazon, Tesla, Microsoft, Meta, and we just saw AMD, the Qs, the spiders, the underlying ETFs, and of course, the S&P 500, NASDAQ futures, very, very big. I saw big sell reversals here in gold, monster shorts. Once the gold, the GLDs took out the 230, I think 59. They've traded below. I think they got down to 228.50, and gold dropped about 20 there. So really, really phenomenal day. S&Ps just dropped just now 20 in the last 20 minutes on this double red short pattern that we identify. The trade of the day so far has been around the 12 o'clock. I called a long. Actually, the trade of the day, let me take a step back and I'll show you, was the non-confirmations on the underlying ETFs on the 30 and 60-minute time frame. So when I say non-confirmation, we're pushing up to new highs, and the MACDs on my indicator one did not confirm. And you can see based upon the MACDs that if you're making new highs, the MACDs indicate my indicator one should be going up with the new high. Instead, it was failing terribly on both the 30 and 60-minute time frames. And then what happened was I got a sell reversal on the 15-minute time frame, and I'll show that to you. And I knew right then and there that those highs were in for the day. In for the day. Okay. Now, when the highs were in for the day, now I'm getting into my sell mode, short mode, right? Based upon my indicator 4 reversing to sell. Then I got the sell reversal, okay, on the 30-minute time frame right here, okay? And then once I got that sell reversal, I told my whole community that the short of the day is going to be off the 15-minute time frame. I'm telling you, it was an absolute Picasso pattern. I built this system. I know how they work, and you can identify. Remember, I told you, if you can identify trends, buy reversals, sell reversals, correlations, disconnects, right? You have mastered the art of trading, because guess what? The next thing you do is, after you identify the 5 conditions, using my indicator 4, you then have to look at what? Each of the 5 conditions has 2 strategies, a buy and a sell divergence. If you can master the art of divergences, you've mastered the art of trading. I've been telling people this for a long, long time. I've taught this to some of the top hedge fund managers in the world. I spent nearly 10 years of my life doing the research and building this, okay? Now, when the 30-minute time frame on my indicator 4 reversed to sell right here, okay, I said the S&Ps, right, we're looking right here. Let me get to the 15-minute time frame right here. When the 15-minute time frame, look at that monster bear flag. And right into my 10-bar weighted moving average, beautiful short. S&Ps were trading around 33. I think I was calling it short, 24 up to 32, 33 range. So basically, I like to, for futures traders, whether you're trading micros or big ones, you like to scale into a position, right? So let's say if I'm calling a short, 25 to 32, 7 handles or whatever, then you probably look, maybe go 25 and a half, maybe you go 27s, you go 29 and a halves. And some people do 1, 1, 1, 1. I like to do the opposite. I like to do, let's say, for example, let's make it simple, 1, 2, 4, and 8. Okay, like to because that brings your average price up. Yes, a lot of risk. Obviously, the more contracts you have in the market, the more risk adverse. But knowing the pattern, okay, is very, very important. Okay, knowing the pattern is very important. So now that I know that the 15 and the 30-minute time frames reverse to sell, you look to short the first bounce on the 15-minute time frame. It was a Picasso. It got overbought right into my negative MACD. I mean, you dropped almost 40 handles in, let's see, on the 15. 1, 2, 3, 4 on the fifth bar. My strategies last anywhere from 1 bar to 8 bars. So if it's a 3-minute time frame, 1 minute to 24 minutes. On a 5-minute, 1 minute to 40 minutes. On a 15-minute, one bar, anywhere from 1 minute, which that's 15-minute time frames don't get 1 minute pullbacks or bounces. 1 minute to up to 2 hours. Right now we're on the fifth bar. So either you can take the cover the short, or you want to keep lowering your stops. When I tell people using my software, right, you have to learn the indicators 1, 2, 3, 4, and 85% of the time I use indicators 1, 3, and 4, and 15% of the time I use indicators 1, 2, 3, 4, and then based upon that, I then look at the numbers on the right, which are really important, right here. And then I look at then I explain my terminology when I speak. A lot of people say, Steve, what does it mean I would look to cover, right? So if you're short the S&Ps, right? If you're short the S&Ps, just like, for example, you're short at 1617, and now it drops to 707, I would say, okay, I would look to cover shorts or lower your stop. So a lot of people don't understand what that means. And what that means is very simple. What that means is if you're short, then you look as it's dropping, you would look depending on how many contracts you have. If you sold 3 or 4, if you sold 1, okay, and it drops 5 handles, 5 points, you look to cover. It's $25 on a micro, less fees. And if you sold 1 big one, it's $250 less fees. But let's say you're scaling into the position and it drops the way it does, you could actually, let's say you're short 5 or 4, make it simple, short 4, right? And it drops, maybe you cover 1, right? 2, 1 or 2, say you just cover 1, you lower your stop. Okay, let's say you're short at 17, it's trading now 13, maybe you cover 1, it goes to 10, you lower your stop. You can always cover and lower your stop or cover everything. And if it goes to 06, 07, you can cover and just constantly just keep moving your hand on that ladder system. Very important to learn how to use the ladder system, practice. That's why the simulators are great to trade. Even if, you're trading and you're following me or not following me, or, in my live stream every day from 9 to 4, or you just want to practice on your own, getting used to putting your orders in on the ladder, canceling your stops, lowering your stops is just like, it's another facet of trading. I personally, between you and I had the good fortune of never touching any type of components. Yeah, there were times when my system went out for something really quick and came right back in. I would put my own orders in, but I seldom ever touch because I'm looking around and I'm just doing too much in too many positions at any given time. So it was very hard for me to keep navigating and God forbid with me touching the mouse. But it's not that hard, especially if you're trading 1 or 2 assets. You set your ladders up properly, right? You have the assets in, whether you're trading gold, whether you're trading oil, we had a beautiful monster long on oil today, monster long. It was just a phenomenal pattern. And oil, I think, ran about 70 cents off that pattern. Great pattern. I can actually show it to you here. But the thing that I want to go over is that it's important to understand that in trading the futures markets, you need to have the underlying ETFs when you're trading the continuous contracts. So on the continuous contracts, like the S&P, NASDAQ, 30-year bonds, gold, and oil, I'm looking at the 3, the 5, the 15, the 30, and the hourly for intraday. On the underlying ETFs, I'll look at the 5, the 15, the 30, and the hourly, right? And I only look at RTH, which is real time hours. I do not look at pre and or post data for the underlying ETFs because there's too much noise and there's not enough volume. So what I like to do is the continuous contract trades north of 23 hours in a day. The underlying ETFs trade 6.5 hours in a day. And when they line up, you better be going in that right direction. Phenomenal. Phenomenal. To be able to see market direction based upon pure mathematics, based upon these patterns that I've studied in my sleep, that these patterns repeat themselves, to be able to align yourself, to be able to be profitable. So I have 5 keywords. Consistency. Well, you want to make money every day. There's nothing worse than making money and giving it back at the end of the day. Last week or a week and a half ago, I heard a story of someone telling me, I'm up $9,000, Steve, but guess what? I lost it all at the end of the day. And I went down 1,000. I said, you just ruined my day. You can't be up $9,000 and then a $10,000 swing. That's impossible. It's a lack of discipline. Okay, and if you wanted to risk maybe 2,000 or 3,000 of that money on a trade, but why give it back? There's nothing greater in my 41 years of walking away every day a winner from this crazy, insane market, right? Can you imagine? Can you imagine that? That's phenomenal. Well, guess what? I did it. Not every single day, but I think I had an average, for my best recollection, about 22 losing days in a year. Okay, so I was very blessed. I was very disciplined. Again, consistency, discipline, confidence, patience, and passion. 5 key words. Hit your goal, you stop, you watch, okay, you paper trade. So many people I know, when they hit their goal, boom, they stop. They stop. And you know something? What's unbelievable is you got to be like Samson. You just got to be that person that can stop. Okay? That you're up your 500, you're up your 300, you're up your 100, you're up whatever. But guess what? Every single day, when you take the money out of the market, it just starts going like this. And then what you do after a week or 2 or 3 or 4, you start bumping up your goal. Let's say your goal is to make $50 a day trading micros. You do it for 2 weeks, maybe bump it up to 75 to 100. And if you lose that money, you have to stop. You can't make, 50, 50, 50, 150, lose 100 and 100. No. That's down 50. You just worked the whole week for nothing, right? So executing orders, okay, knowing how to trade the patterns. Okay, so for example, if you look at this last pattern on the S&Ps, and I'll just put the 5-minute up here. So here, the 5-minute time frame right here correlated with the 15. Okay, well, this is the hourly. Let me just put the 15 up here. Nope, I got it. Sorry. Just got to click in the box. So I know now, okay, so now here, this is the short off the 15. This is the long I called, right? This is the short I called earlier. They got cabooshed, okay? This is the long I called, okay, for the push up into the 10 bar. That rallied, I think, about 20, but it ended up going up 30, okay? And then you got the drop off the 15-minute time frame into the negative MACD. And then if you look here, now the 5-minute time frame was negative, correlating with its 15. You take the short, boom, 17. It hovered around, boom, 03, 04, 03, 02, and then boom, right back down. Okay, so there it is, the 5-minute time frame right around here. But when you got the push up, this most likely was an overbought reading of 90 on double red, meaning the 5 correlated with the 15. When I say double red, okay. Now, when you trade the markets, you really need to look at the underlying ETFs. So when I got that short pattern, okay, on the S&Ps right here, what did I do? I looked exactly where? Boom, right here. I looked at the underlying spiders, the ETF, and identical same pattern. Now I'm going to try this symbol here, Does anybody know the symbol for the SDSs? I don't know. I can't get it. I don't know, for some reason. Maybe Billy can help me here on that. Why that's not working. Also, let's oil. I want to show you this oil here. Let's see what oil is here. CME, natural gas, petroleum oil. Is this it? Nope. I don't know the symbols for these here. I gotta study these a little bit more carefully. Gold, maybe. Let me see what gold's doing here. Okay, at least I got the gold futures up. So today I got the big sell signal on the gold right here early in the morning. But you got to look at the GLDs here. The GLDs here. But the thing about the GLDs is when you got the sell reversal here on the GLDs after we had that gap down, that you see this push up here, right here. Well, the GLDs, okay, were reversed to sell on the 30 and the 60-minute time frame, okay? And what's important to understand is that even when you're looking at the markets, okay, to use the underlying ETFs is very significant. I said, like, I look you square in the eye. I've talked to some of the top hedge fund managers, okay? They had no idea to look at the underlying ETFs. Matter of fact, there's a great story I have, and it goes back like this. A guy I know running a very big fund called me one day and said to me, Stevie, I'm thinking about selling a lot of S&Ps here against our portfolio. And I said, okay, but I got quiet. And he said, what do you think? I said, well, I wouldn't do it. I wouldn't do it. And he said, why wouldn't you do it? And I said, because I don't have, I'm not, you know, I'm not seeing cells. Okay. So he said to me, okay, what should I do? I said, well, you know, I think, you know, and if they drop 10 handles from here, then I'd be really short. Okay. But they're not dropping from what I'm seeing. So he says to me, why would I sell them 10 handles lower? I never forget this conversation with Marty. Why would I sell them 10 handles lower when I could sell them now? I said, because they're not ready. I'd rather sell them there than, you know, right now you can get run over, right? I'm 99%. My best recollection is that the market was up 500 points that day. So the S&Ps were up, I think, close to about 50, 60 points, 55, 65 points from that. And he just said to me, Stevie, great call. I said, now if you want to, you know, I would look to probably sell them here if you want, you know, up 60, 70 handles off the low. Okay. So, you know, again, without looking at, you know, again, I know he's a big fund. He was just trying to, but guess what? Look at the dollar amount. Let's just say they sold a couple thousand S&P futures against their net long position per se, right? It's better to sell a lot higher, 70 handles higher than 70 handles lower, right? Okay. So another great story. I was with a top prop guy one day, and I said to him, I said, I think we should buy him here. I would be looking to buy him here. He said, why are we going to buy him at 26 and a half when we could be buying him at 21 and a half, 22? And I said to him, because it's not confirming yet. And he said, what do you mean? I said, we buy him here. There's a chance to go to 17, 14, 12, 9, 8, whatever. But if they go through this number, I think we're going to, 33, 34, 35, 38. He said, so let me get this straight. You'd rather buy him higher with confirmation than buying him here. I said, yeah, I'd rather buy him higher, knowing that I'm going to be right, north of 85%, versus buying him here, where I think the odds are below 50%. Well, what happened was they hovered, and then boom, they started ticking up. Boom, they took out my number, and then boom, they exploded. I think he was selling 33s, 34s, 35s, 37s. So, and he bought a bunch, right, on the big one. So again, it's really important. Okay, S&P futures. Yeah, I probably would take a long here. Again, so I would look to buy these here. anywhere between the 88.5 and the 95.5 range. So you maybe go 88 to 95. And the reason why is you're making new lows and non-confirmation here on the 5-minute time frame. Okay, so you're making new highs here on the SDSs, but the MACDs aren't confirming. So you see this pattern right here. This pattern right here. Okay, you see this pattern, the 5-minute time frame correlating with the 15. Now this is a little tricky. This pattern here, okay, with somewhere where you take the short and you just wait for the pullback on the 5-minute time frame correlating with the 15, and then look at it go. Boom, the SDSs ran about 12 cents. But guess what? The S&P futures in that same time period, okay, in that same time period, S&Ps were hitting, I think they were hitting probably about the 13, about the 11.5, 12 area, if that, okay. Now, when that happened on this pullback right here into the 10-bar weighted moving average, I knew what? S&Ps were a short, right? S&Ps were a short, okay? So right now, the S&Ps are making new lows here, but the MACDs on the 5-minute time frame are not confirming, and you're getting deeply oversold here on the 30 and 15-minute time frame. So I'm hoping we get one more bounce here. Okay, so if you're trading an S&P future right now, or a NASDAQ futures, or a Russell, or whatever, guess what? You have to then switch to micros because you are fading the trend. It's not a set strategy. This pattern right here is a beautiful pattern. So if you look at the S&P futures, okay, before we got on, here's the 5-minute time frame right here. Here's the short, 17, and guess what? It never looked back, 56.17. If you look back, I think it was, the high was, let me just see, was, yep, 56.17. Beautiful short. 5-minute time frame, reverse to sell, correlating with the 15, where we already got sells on the, let me just switch to this time frame. Sorry, there it is. Let me just see here. 15s. Okay. Now, one of the things that's really important here, okay, is to understand the ability to scale in and scale out of a position. Okay, I'll say it again. The ability to scale in and scale out of a position. So when you're scaling in and scaling out of a position, what you want to do is to be able to fully understand the whole market direction. You want to be able to say, okay, on this trade, I'm going to scale in maybe one here, one here, one here. Maybe you do 3 lots, maybe you do 4 lots, maybe you do 5 lots. Maybe what you do is you do the pyramid way. You go, maybe I'll buy some here, I'll buy a double here, I'll buy triple here, okay, and maybe I'll buy more here. And that brings you down on the average price, okay? And that's really important, bringing down the average price. So what you really want to do and understand is understanding the way to be able to use your capital wisely, put the orders in, right? Scalp long, right? If you're trading scalps, you then switch to micros. If you want a great pattern like today, when we got the big sells above with the non-confirmations, or when we got the pullback on the 15 and the bounce on the 15, which happened around 1250, and then looking at other patterns that will be able to give you the ability to trade the market, okay? So S&Ps is very important to use stop orders, okay? Preservation of capital, that's important, okay? Right now you're 21 handles from the 10-bar moving average. I'd still be looking to buy these here, looking for a bounce, okay? You're getting deeply oversold, and you're 21 points here from the 10-bar weighted moving average, okay? And if you look carefully here, on the 5-minute, let me just switch to the S&Ps here. Okay, here we are. What's going on here? Why don't we? Yes, let me just switch to the S&P futures. Okay, and we should get this bounce here. Okay, with 19 points right here from the 10-bar weighted moving average. Right now, we're 12 points away from the algorithm reversing to buy. So we're really right now in critical juncture here on the S&Ps. The 60-minute time frames on the spiders, if they take out the 555.30 on a closing basis, that whole uptrend for the last 7, 8 days, 9 days is over for now. And then if you take the number here on the Qs, the 475.95 on a 60-minute time frame, that means at the time of 2:30, if these numbers, the 555.30 on the spiders and the 475.95 get violated on the Qs, guess what? I think we're going a lot lower. We're heading a lot lower. Those are 60-minute time frames that have not been violated. There are five major gaps since we had that 51.20 low on August 5th. Okay, since we got that low. Does anybody have any questions here? We have about 4 minutes to go here. Okay, again, when you're fading a trend, you look to do micros, or you just wait for better patterns to trade. Okay, if anybody wants to reach out to me, my phone number is 914-500-7484. I love to talk about futures. I love to talk about the markets. It's really important that you understand the incredible opportunity that the futures markets give you as far as leverage is concerned. And what you really want to do is to be able to, again, understand the patterns, understand if you hear a scalp long or a scalp short. If you ever join my live stream, it's always based upon you, whether that's your risk tolerance or not. A lot of people like that. A lot of people want to constantly be involved in the game. And what people want to do is they want to be able to always be involved. And again, when I tell people, when you hit your goal each and every day, that is something substantial. That is a sign of significant accomplishment, that you're hitting your goal every single day, and that what you're doing is something very, very powerful. Okay, you're being consistent. Okay, does anybody, okay, well, if this hourly gets taken out here, Ivy League Trading, okay, I'm telling you that those numbers would violate what happened the last 9 to 10 days. Okay, does anybody else have any other questions here? And then what I would do is wait for a bounce on the 30-minute time frame, which you may get tomorrow, okay, where we get some type of a bounce, and then I would be looking for shorts, okay? Because if you look at the daily right now is extremely overbought on the NASDAQ and S&Ps. Remember, the S&P futures were trading 51.20 on August 5th, okay? NASDAQ 17,371. We rallied 2,600 points on the NASDAQ. We rallied over 540 S&P points in a matter of what, 2 weeks? It's crazy, okay? Now, it's healthy to get these pullbacks, maybe that extreme, because when we had that 51.20, I remember very carefully that from the price to where my 10-bar weighted moving average is on the daily. See if they have a daily here. Right here, we were from this point to this point, we were 360 handles away. 360. The standard deviation is about 50 based upon my work. So now, what happens? We got this big bounce, right? We had the PPI, we had the CPI, we had the jobs number, the jobless claims number, and boom. Okay, but if you look at the weekly charts here, you tell me what you see here on the weekly. This is a monster bear flag here. Okay, you're butting up against all this overhead resistance. So I think the market should push down between the 53.50, maybe the 54, 54.20, something like that. We'll see. But again, that may be a time to buy them. If anybody has any questions, please feel free to call me. Join my live stream every single day. S&Ps, I think they're going to bounce here above 90 to 95 range. Again, it's been a pleasure to be here. I'm super excited. Back to the Futures. I'll see you here next Tuesday at 1:30. Have a great weekend. Remember, be consistent in your trading. Anybody have any questions? I could talk about this till I'm blue in the face. I love the futures markets. I'm so happy to be here at Tradier Futures. Have a great day, everybody. God bless. Be well.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.